All right, good morning. Welcome back here to Trader Money. Great to have you aboard. Hope you had a fantastic weekend. Market is kicking off here this morning after having a lot of time to digest what happened and what didn't happen between the U.S. and China last week, and what the deal was and what it really wasn't. Because bottom line is really there's no deal has been signed, right? Nothing has been inked, and we're still the market's still looking at that entire process, so it's not going away anytime soon, and it's here to stay for more months and more years to come. We've been talking about that since the beginning of this year that it's going to be a long-term process. We're seeing that continue here now. Today, the bond market is closed for Columbus Day. And so while we see the bond markets closed, stocks are open. We see this a few times a year on different holidays here in the U.S. And a lot of times it's a lower volume type of day in equity markets. We don't tend to see the monster moves come into play. But given what we saw last week, and given just where things are, we could certainly see some movement come into play. But let's go out and take a look at the challenge here. We have two positions on the board. We have Microsoft, which is up about 20 cents here, and we have Walmart, which is down about 15 cents here. You'll notice neither chart's doing a whole lot, right? These are both stocks that have started their trends, right? They're on this just very small, mild, itsy bitsy trend, and no sign of them breaking down. There's no weakness here. There's nothing where you go, oh man, this thing's in trouble because of blah blah blah, and it's just one of those where we haven't seen the punch of movement that's really going to cause an option to appreciate. Its pace of movement in the stock is not out overcoming the time decay element, and so we need to see them really kind of make those punch ups. Will Microsoft finally break out to the upside here? We'll see. But both stocks are coming into their time stops, and these are the prices for Walmart and Microsoft 5 minutes ago. So they're probably about the same. Yeah, they're probably just slightly better, but either way, it's not a big difference. But you'll notice the auto exit date for a red position is already here for Walmart, and it comes this afternoon for Microsoft. For a green position, we're looking at later on this week. So, they do have, definitely can hold Walmart here, unless it turns around in a big way or something like that. We'll see about Microsoft and kind of how that ticks around here. I would really like to hold it, but, we'll see kind of how that plays on out. But no changes to be made, here with it. We don't have any new triggers on the board here this morning, but we did have two triggers on Friday that, could get into today, if the money were there. And there were two positions I talked about. I'm not going to get in. These are two that I'd kind of invoke rule number 11, see what happens when they pull back off of, some of the hype from Friday. And we're seeing them do that. Now, Walgreens looks like a lot of other things out there, right? The IBM chart, right? IBM chart is all over the place out there. The things, there's so much out there that just looks like IBM when it just comes down to it. But when we look at energy and we look at Halliburton, we're seeing a reversal signal here. And what's interesting about this is, I'm going to go to Home Depot. Because this is one that was very vivid, very evident when it happened. We got a downside signal come in on Home Depot, and Home Depot triggered bearish. I believe it was right here, triggered bearish on this candle in March. And suggested, okay, next move is lower. Consolidation risk was very low. But then, 2 days later, the stock reversed and we saw an upside 3-7 crossover. And that was a bullish signal. And we saw the stock, really take off of that. We see this come into play every once in a while where a stock will give a downside signal or an upside signal and then reverse. And the consolidation risk is still very, very low. It's just that the trend direction signal will oscillate or flip flop just a little bit. We're seeing that happen with Halliburton. Now, Halliburton's not a bear signal as it sits right now, but should we hit the end of the day, that bull signal could easily erase, and we could see that bear signal really come into play, here on that, on something like a Halliburton. So there are a few things, like Halliburton that are showing some signs of potential breakdown, but they're not quite there yet. They're not quite at that area, where we look and go, okay, this is overwhelmingly bearish here. Okay, if we look at the scans of where things sit, you will see there are some bearish crossovers today. Halliburton is the only one, at this exact moment, and we have some bullish crossovers. Now, what's interesting about these bullish crossovers is many of them are stocks that are, have fallen a little bit, right? In fact, some of those are coming off of this list. This list is a little bit smaller than it was, but UPS, down today, right? But still has that 3-7 crossover action coming in on it. Why? Because it's dropping off one of the big drop days, and today's drop is a lot lower than others. It's not a signal for the challenge, but Ford, similar position here. Starbucks is having a nice up day, getting some nice buy pressure come into it. Boeing has some news circulating around it, and outperforming the rest of the market here today. So in some decent spots there, but nothing that's on signal right here, right now. We had the market that's down. The S&P is down 1.5 points here today. So pretty mild, inconsequential type of move when it comes down to it. Now we did see a sell-off into the close on Friday, and it was interesting this weekend to kind of read some of the stuff that came about that. Some of the, the trade result must be a disaster because the market sold into the close by 20 points and all of that. Look, can you read something into it? Sure, but would I read too much into it? No. We had a day where the market was up 50 points and it dropped 20 into the close. We see that happen on bottom, on big down days where you get a rally into the close. We see it on bigger up days where there's a sell-off into the close. And yes, ultimately it could break down. And, if you're super bearish, you look at the tops from last week, Friday's tops, those are your stops, right? You go and you short the heck out of this market with stops at Friday's highs. It gives a very nice kind of bearish stop level, here for it. But there's no evidence of real breakdown, coming into play here. At least so far. Again, things change. It's the markets there. But if you take a look at something like the bullish percent index, we saw Friday the real kind of first upward shift in it. Now, it hasn't been enough to give a new bull signal on the bullish percent index, but it's certainly in a much better, much more bullish type of shift than what it has been here for the last 3 to 4 weeks. Okay. All right. So I'm going to continue to hold Walmart, continue to hold Microsoft here, and we'll assess those as they get into the close here today, as well as any new signals on the board. Again, I don't expect too many fireworks, barring some sort of massive news. Just simply due to the Columbus Day element here in the U.S. And then, as we go forward this week, there's going to be plenty of catalysts. We're going to see earnings out of J.P. Morgan, United, Netflix, Goldman. There's going to be a lot of earnings, and that's where the market's really going to turn its attention and say, okay, you know what? We know what the macro environment is. What's the earnings environment? If earnings are still going to grow in this macro environment, stocks will still get bought up. If earnings growth is going to be halted, if we see a lot of corporate warnings about, hey, the macroeconomic elements out there are slowing the revenue and earnings growth, we're going to see the market sell off and sell off sizably. So I do think this is perhaps the most important earnings period that we have seen since January of this year. In terms of investor decision making going forward. Thanks for hopping on. Have yourselves a fantastic day, and we will talk to you this afternoon. Take care.